So in this video, I want to talk about kind of where I think the market's going to go based on what's happened, why I think it might go lower or why I think it might go higher. So let's look at the Dow. A couple months ago in early February, the Dow was over 29,000. Everyone was kind of pushing for 30,000. That would have been a very big milestone for the Dow. A month later, the Dow was at 18.5. It took almost an 11,000 point drop in about a month. That's never happened before in the history of the markets. Since then, the Dow's basically gone up in a straight line, and now it's over 23,000. As for the S&P, a similar scenario was over 3,300, almost 3,400, and it dropped to under 2,200 intraday a month later. Again, the S&P has gone up basically in a straight line, and it's well over 2,700 right now. I believe it could be actually over 2,800 as the time I'm filming this. So the main question everyone's kind of thinking, and everyone I've talked to, is where is the market going to go from here? Personally, I think the market's going to go back down. I thought the Dow and the S&P should have hung at those lows for a while. I don't think they should have just gone right back up in a V shape. I think that was a little too drastic. I think basically any news about this virus that's somewhat positive just moves the markets right back up. And I'm trying to think of it as more like a hurricane. And I heard this analogy and I thought it was really good. So when a hurricane ends, the storm stops, like great. But the thing is that all that destruction that still needs to be solved. Like there's houses that are destroyed, like restaurants are destroyed. And it's kind of the same thing here. When the virus eventually subsides, because I believe it will subside eventually, as I'm sure everyone does, then there's still going to be a lot of problems that need to be dealt with. Other factors to consider here. The United States has about 22 million unemployment claims. That is ridiculous. Like this numbers weren't even that bad in the Great Recession. GDP for the next couple of quarters is going to be awful. It's going to be awful because businesses just aren't open, so they're not making any money. And as businesses start to reopen, investors are going to realize how much money these businesses lost over time. And plus, when things do actually reopen, they're not just going to go right back to normal. Like restaurants aren't just going to be flooded. Like Vegas isn't just going to go back to being Vegas with millions of people there all the time. Like the city that never sleeps. Well, this city is sleeping essentially. Not to mention, I feel like people, governors, President Trump, they're trying too hard to reopen the economy. I think Georgia's actually reopening this week, like maybe Friday, which I think is way too soon. And I think what this could cause a second wave of this virus. So essentially you would see a peak and then it would dip and then it would just surge because everything opens back up. So anyway, basically to summarize, I really think this market's a little overvalued right now. I think there's some more pain to come. And I think this will be similar to the last recession where it's not a drastic drop. It's more of a up, down, and it'll eventually go back down. I could absolutely see the Dow going back down to 18.5. I could even see it going below that, to be perfectly honest with you. Will it? I don't know. We're going to find out. As for what I'm doing personally right now, I'm mainly just sitting in cash. I'm not really buying too much. I'm kind of looking, researching. I don't feel the need to buy anything because I think it's going to go back down. I've done enough buying before at the lows where I think either way it's a win-win because I'll either make profit off of that or things will go lower and I'll just be able to buy more. So that's my 2 cents on this. That's where I think the market's going to go. Do your own research and I'll see you guys in the next video. Bye-bye.